Bank of Canada rate announcement day. Bank of Canada announced today that they are cutting interest rates 0.25%. That means the overnight rate has now dropped from 2.75 to 2.5%. For everybody with a variable rate mortgage, that means that the prime rate has now gone from 4.95 to 4.7%. So good news if you have a variable rate mortgage or a home equity line of credit. What you will find is that you are going to be paying less on those products moving forward. The Bank of Canada today, in their announcement specifically, is noting that there is a weaker Canadian economy overall. The impact of the U.S. trade situation is really starting to show up. We've seen it in terms of our job numbers. Several weeks ago, there was a jobs report that showed that Canada lost 60,000 jobs, fairly sizable in terms of the amount of job loss that was there. On top of that, inflation appears to be rather stable at this point in time. The Liberal government recently removed all of the retaliatory tariffs on the United States, which is a good thing from an inflation perspective here in Canada. So what is the forecast moving forward? The expectation is that the Bank of Canada will cut rates again in October. Now, given this data, provided that there's nothing crazy that happens. If you look historically, the Bank of Canada, when they cut interest rates, they never just cut them once. There's usually a series of cuts, and then they may pause and wait and see where we go from there. There's a lot of unknown as far as the Canadian economy moving forward at this point in time. We do have the Liberal budget that is tabled to come out on November 4th. There is supposed to be a considerable amount of spending in that. We will have to see how that impacts the Canadian economy. The other really large piece that everybody is waiting for now is the U.S. trade situation. And as many people may or may not know, next year we are set to renegotiate the CUSMA agreement with the United States as well as Mexico. I imagine at this point in time, the U.S. is just kicking the can down. Majority of the trade goods in Canada are protected under that agreement, about 85% of all trade. Certainly there are industries such as steel and aluminum, the auto industry, that are getting hit hard that are not protected by that at the moment. But, that is really the big agreement. If we get nothing in place between now and, let's call it June of next year, when that is supposed to be renegotiated, you could see further pain in the Canadian economy and we could see further rate cuts. It's not for sure, but we'll have to see how that plays out moving forward. If you have a fixed rate mortgage, this information doesn't necessarily impact you, but the one question that everybody does ask me is, Tyler, what happens with fixed rate mortgages now? And so keep in mind, fixed rate mortgages are based on the Canadian bond yields. When we look at the bond market moves in advance of these Bank of Canada rate announcements. So I do not expect that we're going to see further declines in fixed rates at the moment. What we'll have to see is the additional economic data that will come out in the weeks to come that will highlight, if the Canadian economy is getting worse. If that is the case, you may see the bond yields continue to decline, in which place we would see those fixed rates come down. Fixed rate mortgages today, for the most part, 3-year fixed mortgages, still in that 3.69 to 3.99 range, depending on if you have a high ratio mortgage or not. One of the other questions that is very commonplace today for our office is, Tyler, where is the housing market going? And so housing market at the moment and this rate cut, certainly not going to be turning a corner. What we have seen is that, again, given the state of the Canadian economy, we've seen a significant amount of decreases as far as housing prices are concerned. There are a record number of listings in some areas, and things are just not moving very fast. It is a buyer's market in almost all markets at this point in time. Some of them are a little bit more balanced depending upon the pockets and areas that you're in, but still very much a buyer's market. I do expect this to remain the status quo for the remainder of 2025. As we get into 2026, if we have continued easing in terms of interest rates, it's certainly going to bring more buyers back to the market. There are still buyers available in the market. We're doing a lot of pre-approvals here currently at Pilot. There are some fantastic deals out there, but there's certainly no rush. So what we're seeing from buyers, the Canadian mortgage space at the moment and housing space, is that they have the ability to be very picky in terms of what they're looking for. And every single month that they've been waiting, the prices have continued to come down and interest rates have come down. So there's been no pressure on them to have to go out and buy. So I expect this to be the status quo for the remainder of 2025. Certainly, again, as interest rates come off, we will see more housing activity, but still going to be rather muted. I don't think that we have any major housing crisis as far as, things getting predominantly worse and housing values, absolutely tumbling off a cliff, but we'll have to wait and see where things go from here. What we've told all all of our clients that are looking to buy. Just be ready, take a look out there, find something that fits your budget that you're very comfortable with. Expect to be in that home, for the next 3 to 5 to 10 years potentially. I do not think we'll see the same amount of real estate growth that we have seen over the last 10 years. Certainly nothing like what we had in COVID, but it should be relatively muted with limited immigration moving forward here in Canada. So that is your update on the Canadian mortgage space, the rate cut that we had today. If you have any questions, you have any concerns, we would love to help you guys. Renewal is still a very big one for clients today. So if you have an upcoming mortgage renewal, please make sure that you reach out to our office. What we have found is that we've been able to save clients thousands of dollars on renewals. The banks are not always competitive. Sometimes they are, but they definitely take a little bit of negotiating in order to get that pricing in line with where it should be. So I hope you're all doing well. Thank you again for your time and all of your support, and I hope you have an incredible fall.